And good afternoon. We're back looking at UPST. Uncle Paul, Sam, Tom. I've got a 328.91 target. And how do you tell whether you should be shorting a stock? Well, market profile is going to tell you very quickly in a half-hour bar that this is something we call one time framing, where each lower period is higher. And do you see how that F period only took the low of E by one tick and then continued up? This is what we call an inventory correction. Markets trend and then they correct inventory. Then they go back to trending. This is when the power of the buy order flow is very, very strong. You don't short that. Another thing is, if you see these single prints, these are short positions in the market during the middle of the day. That's usually when they run stops. So when you have short positions in a market, what do you have there? You have buyers, right? You have buyers here, right? These are boxes of buying. This is where market structure will keep you out of trouble. So you have trend up with no supply. One time framing up with no supply. Write it on the chalkboard 100 times. I will not short one time framing up with no supply. One time framing up, single prints means trend up, no supply. For those on candle wax, look at where your VWAP is. Look at your second standard and first standard deviations. This market has not broken the first standard deviation. That means there is no supply. You should not be shorting this kind of a market. This is a long market by all means. Look for a reaction at 328.91. They might front run it a little bit. These are kind of new levels, so we'll see how they work. But the next I or J period will either take out that high, run the stops, or what will happen is we'll have some excess and then inventory will correct, and what you will look for is lower. Be right back.